Hello, Leo Jr. over here at Gem Young Insurance, coming at you with the next version of Insurance Simplified, the 5 types of business insurance. This video is dedicated to all you business owners or aspiring business owners, from big to small, from old to new, to help talk about the different types of business insurance. I'll give you some examples of claims, what they cover, what they do, how to know if your business actually needs this coverage, and lastly, I'll include for each type of business insurance the way to save the most possible money on it. My philosophy here is to make sure that you are adequately insured, not overinsured, not underinsured, but insured to appropriately cover the risks of your business. Now, I know insurance is dry, so hopefully I make it a little fun, or if you at least enjoy watching me talk with my hands, I guess that's cool too, right? I am Italian after all. So if you really like what I have to say, please like and subscribe. Otherwise, let's dive on in. Commercial property is what we're going to start with. And commercial property is designed to cover the things that you own in your business. In the insurance industry, we define that as quite literally things: buildings, equipment, machinery, inventory are terrific examples of commercial property, and they're the ones that are most universally understood. Within commercial property, you have coverage set aside for how much risk you want to transfer to the insurance company. Namely, do you want us to replace your stuff? Or do you want to just give you what it's worth, right? In my business, we call that replacement cost versus actual cash value, right? To the rest of the world, what I just said. Do you want us to replace that $2 million of beer inventory you have in your warehouse? We will. That's one price. Do you want us to just give you the depreciated value for that? That's a different price. Part of the reason you hire an agent is to have that consultation. Same thing with your building. We can talk about insuring your building to rebuild it from the ground up, which we will. Or we can just give you the value of that building. So let's say you have, we're gonna go back to that beer warehouse, right? Let's say you have a $2 million warehouse, right? That's the cost you paid for the warehouse. Let's say it takes you $4.5 million to rebuild the warehouse. Now, there'll be a whole separate video on replacement costs and valuation, but for the purpose of this, let's just say those numbers all make sense, right? $4.5 million to rebuild the warehouse, $2 million to buy it. You have $1 million of inventory in it. You can insure that warehouse for $4.5 million, and you can insure your inventory for $1 million, meaning you have $5.5 million of coverage between your inventory and your warehouse. And let's say, God forbid, that building burns totally to the ground and we lose everything. In the insurance world, we call that a total loss or a really, really big claim. Your commercial property policy would say, okay, Company X, your warehouse insured for $4.5 million, we will replace that. Meaning we'll demolish the old building, we'll hire an architect and engineer to design the new building, we will pay for labor, we will pay for material. That's the hidden costs of replacement cost. That's really important. As you can see in this example, I used time and a half, because that's not an unreasonable multiplier, meaning that the purchase price of a building and the replacement cost is usually different. So that's how that claim would respond. The insurance company would come write you a check and you'd start getting your building repaired. What about the inventory? Let's assume you had replacement costs on that too. We would do the same thing. We would have you get your inventory records or whatever the insurance company's claims process looked like. Some are different, most are really relatively similar. We'd figure out how much inventory you had and then pay you to replace it. Now, the next question you're probably thinking, what's my deductible? That's all part of commercial property too. Property insurance, whether it's commercial or personal, always has a deductible. The most common business insurance deductible I see for an average size business is between $1,000 and $2,500. Now, typically what we start to see when your business is bigger and your buildings are bigger and your insurance is bigger, deductibles get bigger too. So the truth is, for someone that has a $4.5 million warehouse and $1 million of inventory, your deductible might be closer to the $5,000 or $10,000 range. If I can offer some free advice, deductible should make sense with your cash flow of your business. That's a big deal. Make sure that if any given time you have $2,500 laying around or whatever you choose to take on, totally fine. So the next thing I promised is how I tell you how to save money. We talked about what it is, what it does, how to know if your business needs it, which is if you own things, if you own buildings, if you own inventory, if you lease space, own machinery and equipment. So how do you save money on your property insurance? Or how I like to put it, how do you optimize your cost? What I would tell you is insure your property. Don't get cheap on your property and insure it for replacement cost. That's going to cost a little more, but it's going to give you the better coverage. How you save money on your property insurance is you play with your deductibles. Higher deductibles equals lower cost. A secret of the business insurance world that nobody talks about is agents have pricing authority with insurance companies. Some pricing authority is 5%, some is 25%. If your business has no claims, if your business has good credit, which you can control, if your business has proper protective measures in the building, that helps your price. We can negotiate with your insurance company up to a certain amount of money, which is really cool. Nobody knows that. So if you're taking care of your building, if your roof is newer, if you have security features, a sprinkler system, if you have updated electrics, taking care of your stuff is the ultimate way to save money. And when you do that, you can tell your agent, listen, I'm better than average. You can help me, and then I can go negotiate on your behalf. That's a secret of saving money in business. Take care of your stuff and then get an agent to get eyes on it. I hope this helps. Let's move on to general liability. So general liability. So what does that mean? What's it do? Why should I care and do I need it? Number one, every business in America needs it. If you don't have general liability, go buy it. It's an incredibly important part of your insurance. General liability protects you for when you get sued, right? It's property damage or bodily injury that you might have caused negligently, and somebody wants to come after you. So in layman's terms, like I said, lawsuit protection. There's two types of general liability contracts in the commercial insurance world. There's what's called an occurrence form and a claims made form. Here's the big difference. An occurrence form covers a claim that happens during the policy period. So if you have a policy from January 1 of 22 to January 1 of 23, you have a claim on July 1st of 22, that's covered under the policy, assuming it's a covered claim. A claims made contract means that if a claim is filed between the policy period, coverage kicks in. So if you have that same January 1st to January 1st, claim is filed on July 1st, you have coverage. So the difference between, I point that out in the beginning because general liability is written typically on an occurrence contract, meaning claim filed or a claim occurs during the policy period. Certain specialty liability, which we'll get into in a later video, like cyber liability, for instance, is a claims made contract. Professional liability, cyber liability, errors and omissions liability, specialty liability, claims made, general liability, occurrence. So the best way to describe liability insurance in my mind is to give you a claims example. So let's jump to that. Let's say you have that beer distributor we were talking about, right? And it's March and you're in Northeast Ohio and the winter has not been kind to your parking lot. And there's potholes all over the place. A customer walks in and that particular customer twists their ankle and gets seriously hurt in your parking lot and you get sued, right? This is textbook general liability. The insurance company would have to provide you coverage, assuming, like I said, everything's in there. And we would also have to provide you with what we call the duty to defend, meaning that if you get sued or there's a liability claim against you, we have to defend you in a court of law, whether the claim is the most outrageous, bogus claim we've ever seen, or it's a perfectly legitimate claim, or likely somewhere in between, we still have to defend you. That's part of the reason why you want general liability. Those can get really, really expensive. The most common general liability level is $1 million occurrence and $2 million aggregate. What that means is for any one general liability claim, we'll pay $1 million. For any one policy year, we'll pay up to $2 million in general liability claims. The reason that is the industry standard and the reason why I'm saying those exact numbers to you is every contract we make certificates for, or trucking company, they want those limits. This is just the industry, the way it works. So if you're buying general liability insurance and someone's asking you for a certificate, which is just like an ID card for general liability insurance, we make it up, send it to you, you show it to your GC or your landlord and they're fine. That's just what it is. So you don't want to spend money on liability insurance and budget around lower limits, and then your landlord or your general contractor calls and says, hey, sorry, you got to bump that up. We've had that, it's no fun, so get ahead of it there. How do you save money on your liability insurance? Well, be as safe as you can. As sarcastic as that sounds, it's not meant to. If you're in the world of making things, like I said, a carpenter, a machinist, whatever, make sure your tools and equipment have a preventative maintenance program. Make sure that your floors are cleaned and maintained. There's not wires and stuff everywhere. Make sure that your employees are receiving proper training so they're not hurting other people or other things. Make sure you're cleaning things up, because like I said in the property video, when you as a business owner do the best possible job you can, I get to negotiate on your behalf. General liability, again, is a segment I could make an hour-long video about. The purpose was just to give you a little bit here. How do you know if your business needs it? If you're in business, you need it. Without further ado, let's move on to topic number 3. So next up is workers' compensation, right? This one's pretty easy for, I find, people to grasp, but let's pretend you've never heard of it before. Workers' comp is designed as an insurance policy to protect your employees while they're injured during the course of work. Pretty straightforward. So how do you help your employees not get hurt, right? Well, train them. That's the best advice I can give you. OSHA is a great resource. In my former life as a mechanical engineer and industrial engineer, we had all different types of training, and it's a really good thing to do because there's also videos, there's OSHA training, you can do safety training. If your business is big enough, you probably have a safety engineer or a safety person. Make sure that your employees are aware of the dangers of work. You don't want to scare them into not wanting to go about their day, but they need to be aware that that rotating equipment is not safe. For instance, if you run a machine shop and you have employees with long hair or that wear jewelry on their hands, you should be training them to take that off because that gets caught in rotating equipment and can do some pretty gruesome things. A little bit of free OSHA advice for you there. So again, make sure they're trained, make sure they're educated. Workers' compensation insurance is priced on a few different ways. Number one, it's priced on the number of employees and what they do for you. Number two, it's going to be priced on what's called your mod factor. Your mod factor is a claims experience factor. So depending on how many workers' compensation claims you've had will depend on your pricing. Just like all the other types of insurance, right? We call it a loss history on commercial property, commercial auto, and general liability. Workers' comp just calls it a mod factor. It's something that every business needs if you have employees, and I would definitely recommend considering higher limits of workers' compensation today. It would be worth it to spend the extra money here because of the increasing cost of healthcare and medical related bills. Next up, let's talk about commercial auto. So the next section is commercial auto, which most of us are familiar with auto insurance because most of us own cars, so most of us have what we call a personal auto policy. The difference is think of the personal auto policy you have, but make it for your business. So the question I get from my clients the most is, how do I know if I need a commercial auto policy? What you want to consider is if your business is hauling goods, hauling for others, hauling people, transporting equipment or machinery, or hopping to job site to transfer machinery or equipment, then you're probably a commercial auto. Some really good textbook examples of a commercial auto is a masonry contractor, carpentry contractor, paving company, trucking company, taxi service. Those are all really very easy to conceptualize commercial autos because they're exactly the definition I just said. Some examples of companies that might not be commercial autos are like if you're a real estate agent, right? You're not hauling anything, you're not hauling for anybody, you're just going from house to house, and odds are you could just have a personal policy with what's called business use. So I say that to help you classify. So in your head, we were talking about a beer distributor and we were talking about a carpenter. Both of those businesses would be commercial auto. One would be actually a trucking policy and the one would just be contractors commercial auto. So what's commercial auto cover, right? Just like your personal policy, it covers your property and your casualty or your liability, meaning the stuff and the risks you inherit by driving or operating that vehicle. Commercial auto will also cover your employees driving that vehicle and what we call hired or non-owned vehicles, meaning if you hired someone to haul for you or if you have an employee drive his or her car for business purposes. Those are what are called commercial auto symbols, which will be another video we'll go down the road. But the truth is, commercial auto policies are all going to be different based on what symbols you pick. Number 1 is any auto, number 7 is scheduled autos, and there's a bunch of symbols in between. So when you read your commercial auto policy, if you have one, pay attention to the symbols. And if you don't know where to find them, call your agent or check on your declarations page, which is just a part of your policy that shows you what's covered. So like I said, commercial auto has liability, just like a personal auto, and will cover comp and collision or full coverage like we do on personal lines. Just like personal lines, commercial auto will have towing coverage, and it could also have what we call rental reimbursement, which is just an insurance way of saying, if you have a claim, we'll rent you a car. Commercial auto pricing. This is what people ask me a lot too. How do I get the best price on commercial auto and how do I optimize my costs? Well, number one, be a good driver. That's within your control. Check your employees' driving records. Before you add an employee to your commercial auto policy, ask them if they have driving issues, violations, DUIs, reckless ops are big ones, and check their age. Anybody under the age of 25 is considered a youthful driver, and that individual could be the best driver in the world. They're just under 25, so they're going to cost a lot more money. Just like with all the other lines of business I've mentioned earlier, commercial auto's claims history is also a big deal, as well as years in business. This is also a coverage that your agent can negotiate for you. So if you're one of those businesses or individuals that has what we would call an optimum underwriting profile, or you don't have accidents, you have good credit, you don't have a bunch of speeding tickets, you don't have a lot of claims, then you could probably qualify for some better pricing. The other thing with commercial auto pricing is the type of vehicles we're insuring. If you have a semi-truck fleet like that distributor, or if you have a couple of half-ton or quarter-ton, three-quarter-ton pickups, those are going to cost different things to insure, plus what you're doing for a living and plus what you're hauling. The truth is, insurance is very tailored to the business. Commercial auto is no different. Okay, now that we've talked about a little bit more on commercial auto, let's talk about a claim scenario, right? Let's say you're driving a work truck and it's snowing outside and you slide on black ice and you run into somebody very hard, right? You cause some damage to the driver of the other car, a passenger, you total their car and you total your truck. How's your commercial auto policy respond? Well, like I mentioned earlier, the liability section, remember liability covers property and bodily injury, would pay for the damages to the other driver's car. The bodily injury part of your commercial auto policy would pay for the damages, actual damages to the driver and the passengers. And your collision insurance on your commercial auto, once you pay the deductible, would cover the cost of repair or replace your truck. Like all auto policies, there's a property and liability component, and sometimes claims trigger different parts of the policy. Again, double check your declarations page to make sure all of these coverages are included. Let's move on. Okay, so what if your equipment and your tools doesn't stay in one location, but goes all over the place? Kind of, again, going off that contractor example we were talking about. So let's say you're a contractor and you don't have a shop, but you have trailers full of tons of tools to do what you have to do. There's a line of coverage in business insurance called inland marine. Inland marine is a really weird way to say stuff that goes places. I know. Why would you name it inland marine? I've been in this industry a long time and I'm the third generation in this industry and I have no idea why they came up with that name. Again, my industry is not good at talking to people. So anyway, inland marine is designed to protect the stuff that you own that goes from location to location to location. A terrific example is contractors. You are taking your stuff from your house to a home you're building, right? And then in the afternoon, you have to go to another home that you're building. So your saws, your air nailers, your compressors, your tools, stuff that you're bringing for the job, maybe lumber, maybe rocks, maybe bricks, maybe stone, mortar, whatever, all that stuff is moving around. Property insurance is underwritten and insured for a location. Inland marine is not. That's why we sometimes call it a floater. So ask yourself, does my business property move around? If you're a retail store, it probably doesn't. People walk in, they buy your stuff, they leave. Or you ship it, and the shipping company probably takes on the responsibility. Let's say, again, you're not a contractor. Let's say you're a trucking company or that beer distributor I mentioned earlier. You own a fleet of semi-trucks, commercial auto, and you fill those semi-trucks with $100,000 of beer on each truck, and you send it across the country. Even as a distillery or a microbrew or a brewery, you could have this exposure. So how do you cover the beer that's inside the truck, right? Because that tree falls on it, we'll pay for the truck, but we don't care what's in it. So that's what inland marine does. It's called motor truck cargo in this particular case, which is a subset of inland marine. Again, not gonna get too far in the weeds today, but you have stuff that you own that's moving. That's how we cover it. So again, ask yourself, do I need this coverage? Well, I don't know. Is my stuff moving? Yes. Okay, what stuff is moving? How is it moving, right? Are you a contractor and just have hammers and air compressors and saws and that stuff moving? Or are you moving a bulldozer? That's a different type of inland marine. So how do we calculate the premium? Kind of what I just said. There's different categories of inland marine. We calculate it based on the value of what we're insuring. We also, again, take into account claims history and credit. The best way to save money on your inland marine is be open-minded with your deductibles, and again, ask your agent for some credits. You can have as low as a $0 deductible or all the way up to $1,000 or more with inland marine. The next thing I want to talk about is a little bit of bonus, and that's business life insurance. So business life insurance, again, how do I know if I need it? Part of the reason I'm bringing this up is this is something that most people that own businesses don't talk about. We always talk about your stuff or the trucks or the liability or sometimes the tangible parts of insurance, as tangible as you can make insurance. But where we see businesses go wrong is they don't figure out what happens if the owner dies. It's kind of a morbid thing to do, but it's true. You know, are you married? Is your spouse going to take over the business? Do you have a partnership or several partners or a multi-member LLC? Are those partners going to get the business? If so, is there a buy-sell agreement? Is there a way for them to buy your spouse out? If so, who's funding that? Life insurance in business is a way of perpetuating your business and helping insure it against your untimely death. One of the most common things we see in business life insurance is a buy-sell agreement, or what we call key person life insurance. So a buy-sell agreement is kind of what I alluded to. Let's say you have partner X and partner Y and they're both married. Partner X dies. They sign an agreement before partner X dies that if one of them dies, the other one has to buy out the spouse and the spouse has to sell. Well, let's say the business is worth $10 million, or let's use a more small number. Let's say it's worth $1 million. That spouse or that other business owner would have to come up with $500,000 to buy out the spouse of partner X when he or she passes away. What life insurance does is it says, okay, we're insuring this agreement by saying that if this person dies, we will give this person $500,000 to buy out this person's spouse. Sounds kind of complicated, but this could be the difference between a business folding, splitting, or moving on like nothing ever happened. The next thing I talked about was a key person life insurance policy. Let's say you have that business, right? And let's say you're a engineering firm and you have a Lee Iacocca type of engineer. As a former engineer, he was my idol. So anyway, let's say you have that guy that is just a total savant, or that lady that's just so bright you cannot do your business without her. If you have to replace that person, you probably have to train them for years and years. It would probably cost you a fortune. We can insure that so that if that person dies while they're working for you, we will pay the business X amount of dollars to go find his or her replacement, to go train his or her replacement, and it maybe even help you recoup some lost revenue. Pro tip for business owners, especially in this economy, how to keep those employees around is inside these policies, some of them build cash value. You can promise that cash value to this person as a deferred compensation, and they can be up to $100,000 or more. And you can give that to this person for staying 20, 30, 40 years, whatever. Again, that's a very complicated part of business insurance, but I wanted to give you stuff on the surface to maybe consider there. So this video was longer than the other one I made. I totally know that. But again, I really care about making sure that folks out there can maintain their business. Again, as a third generation small business person, it's really important to me that we get to help there. So that's what this was about. I hope you got something good out of it. Again, property, liability, commercial auto, workers' comp, inland marine, and the bonus was business life insurance. Those are the 5 main categories of insurance in business. There's a lot more, but ask yourself if you need it, get your credit in order, stay safe, and ask your agent for some pricing authority to help you get the best pricing possible to make sure that you're protected, but you're not getting hosed either. If you like what I had to say, or you want to throw something funny in the comments, please feel free, and don't forget to like and subscribe. Thank you all for watching, and good luck.